Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, November 6th, 2009. Well, we're talking about a very slow day on Wall Street, folks, and you're getting a view here of a little bit of the charting we do on the nightly videos. That's all you're going to see there. As you can see, a lot of different pattern recognition things that we do in the Research Center nightly video. I've now switched over to the intraday, and I just wanted to give you guys a little bit of a heads up that there are some key things out there that I strongly suggest you're aware of on the daily charts going into next week. Some very, very important things that you need to be fully versed in if you're going to be ready for next week as a swing trader, longer-term investor, or a day trader. Now, getting into the intraday charts here, the markets, again, are about as flat as you can be. The Dow is up 4 points. The Nasdaq is up 3 points. The S&P is up 1 point. Basically flat on the day to slightly positive. We have a little bit of a triangle shape here. If you take this low and connect it right through these lows of the day today, you have a bottom of a triangle, and then the top of the triangle curves down here. And the question is, well, which way are we going to break out into the close of this market? That's really going to be the bottom line, and you have to wonder which way they're going to take this market into the afternoon session. I don't necessarily expect a big move either way, to be honest. For the most part, this market is just very, very quiet. We gapped lower today on the back of an ugly, ugly unemployment number at 10.2%. The market was expecting 9.9. 10.2 is what it came out to be. But bottom line is, you have to look at more than just the number. Remember, the numbers are used by the media to give you guys some reason why the market goes up or down. And oftentimes, on a psychological base, the institutions like Goldman Sachs will utilize those numbers to take your money as a trader, as an investor, as a swing trader from you. Why? Well, what does that mean? Well, bottom line is, when everyone sees that 10.2 number, they say, oh, this market's going to get crushed. And all the amateurs out there say, oh, well, I'm going to jump on short. Go short, 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 short. And they're shorting early pre-market activity or right at the open. Well, guess what? The institution is sitting there and saying, all right, yeah, let all the little guys short. We're going to just run this right up against them because we have more money than they have, and we can push the money in a direction that they can't do anything about. So we're going to stop them out. We're going to take their money from them, let them go short. We're going to ram this market right up their rear end and take their money from them. So you have that type of situation there. Obviously, when too many people, that's why psychology works, because when too many people are too bearish, like they were after that jobs number, the market's going to have to do a little bit of a 180 on them. And sure enough, that's exactly what happened. If you go by the key levels that we've given in the charts, you can see that before it happens. And we let you guys understand that. We're going to take you through that. And just to note that today, look at this first open. We opened right here on major support. See this blue trend line right here? This yellow trend line sloping here and the 50 moving average? We opened right there. And the first thing I said to them, I said in the chat room to the chat room traders today, I said, guys, be ready. We could push up here based on your on support. You are on support. Watch to see if it closes below. If it doesn't close below, this market's going higher. That's the alert that went out. And look at the move up in this market. Up, 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 all the way up to a key green trend line right up here. This is a key level we had on the charts as it came in at 107.35. And sure enough, we hit 107.35 to 107.40. And then the market starts to reverse. So you get a lot of people bearish right here. Rip them right up here, make them cover their shorts, and then sure enough, you can get them to go long. All the amateurs see this. Oh, well, this market's going to start to squeeze now. Let's go long. And sure enough, okay, whoops. Take their money as well on the downside. So you do a little whipperoo right there and take the money from both players, longs and shorts, right there, and just whip them right out of the market. Then what happens? You come back in, you retest this 50 moving average. Notice how you could not close below the 50? That's a bullish sign again. When you can't close below the 50 on the first time, you close above, and second time you pierce it, close above. Nice bottoming tail there as well. That's a bullish signal. The market's going to head higher. Also, you had to note, and we said this to them earlier, we said, guys, be aware. You have the Yankee Parade in New York City. That's going to draw a lot of traders away right there as they're going to pass Wall Street. You have all these little factors. The jobs numbers over. We had the Fed this week. You had a lot of nonsense this week in economic news and even a little bit on earnings side. And now it's all over and the market needs to breathe. Remember, you run a 20-mile, 26-point and change mile marathon, you're going to need to take a little bit of a breather. And that's what this market's doing this afternoon. The volume has just gone to sleep. Literally, it's done. I mean, look at this. You had great volume this morning and then it just died out. And we're at a point now where we were on pace to do huge volume this morning in the first hour of trading because of the unemployment number, and now you're at the point where you're going to have one of the lighter trading days in the last 3 weeks. That's how much it's died out, and you have to recognize that and understand it. And what does that do? Well, right away, as soon as we're coming down here into support right down here, I'm saying to the traders, guys, be ready. This market, again, very light volume starting to come in now. You expect the light volume to continue, get even lighter into the close, and what that's going to do is have the market have a slight, from this point, slight neutral to upside bias, and that's exactly what's happened. Now the market's coming in here, you're still slightly positive. You can see you're trying to break down, but even if you break down through this little bit of triangle, you have support right here, you have the 50 moving average, then you have this line all the way down here into the lows of the day. So there's a lot of supports here. Again, in general, what I would say is the market's most likely going to end in a neutralist stance, maybe down a little bit, maybe up a little bit around that flat line. Again, with lighter volume, I don't expect a major move either way, unless we get some weird thing that happens in the news, something happens geopolitically or something like that. But for the most part, I don't expect a major move either way. So that's what we have. You have a little selling coming in here, and the spiders are now just up 2 pennies. You still have a positive market. You're going to hit support right here, and then right down here at the 50 moving average will be your next spot of support. Watch that very closely into the afternoon session, folks. Be interesting to see where this closes. Again, I picked up a key position yesterday. Hot Charts and Alerts put some stuff out on that on the Research Center. You want to get involved in that, folks. You definitely want to be aware of what's going on out there because we will enlighten you, we'll guide you, we'll educate you, and we can make sure that you're on the right side of the movement in the market and you understand why. Avoid the traps that the institutional investors and traders set for you guys because they are all around. It's like walking through a minefield when you're trying to trade your own money and manage your own money. You got to know the tricks of the trade. Bottom line. Have a wonderful Friday weekend, folks. We will talk to you next week. Take care.